lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Right. Welcome, everybody, to the last day of the first month of the second quarter of 2024. Welcome to the morning show. Spencer Israel, JC Parets, Steve Strazza, Alfonso DePablos with you on this fine Tuesday morning. Good morning, chat. Everyone in there. Peter, Christos, Ravi, Dawson, Vagtana. Hope I'm saying that right. Dawson, P. Tilly, Jason, Mary, Joe. Acquisitions marketing was first today. Good morning to you all. Let's see what's on the docket for today. Okay, Ian McMillan will be on the show. He is an analyst. He is with Client First Tax and Wealth Advisors. Also the author of a book, and the link to which is in the description. Check it out. Whatisastockbook.com, the kids book. Check it out. So we'll have Ian on at 9. We'll have Patrick Donawilla from the chart report on, I don't know, 9:30, 9:40-ish. And in the meantime, we got charts. Of course we have charts. That's what we do here. Let's bring the guys on and let's go.
Oh, yeah. We're back.
Oh, wait a minute. Check this out. Mr. Steve Strazza looking official today. I like it.
Look at you. Look at you, buddy. What's going on?
Not much.
No, just chilling. I got a confession to make.
Oh,
What?
gosh.
I peaked at the monthly candles.
Day early?
The day of. It was this morning, to be fair. I couldn't wait. I was so excited this morning. I'm like, what's the harm in taking a peek? It's been already 29 days. What's one more?
I don't think there is any harm. I think it's okay because they're shaping up. You want to know what they're going to look like.
I don't want to make a habit of it.
Yeah. So why did you peak? Are you got something going on later, or you're just that excited? You're just giddy about these new monthlies?
I don't know if you heard, but I have a million kids, so I definitely have something going on later.
Got kids. Yeah.
But it was mostly because I was giddy. Ready? I don't know if you peaked, but how many assets are up every month this year?
Oh. This was in your email that I admittedly haven't read yet.
Don't look.
I didn't even read it yet.
Go.
How many assets?
I could cheat and tell you.
Any assets, just think of anything that's up every month this year.
Dollar.
Yep. US dollar
Energy?
index. What?
That's not an asset.
Energy?
Crude oil.
Energy was
not energy stock. Crude oil and the US dollar. Why don't you hit that bumper, Spencer, and let's talk about it.
Pretty good.
All right.
Interesting.
All right, so let's see, slide 2 there, Spencer. Let's show the kids what's going on so far this year. Not a lot of things you can bring up that are up every month this year. How about that?
Traditionally, we chart these two together and we overlay them and we draw them in opposite ways.
That's right.
Not anymore.
Well, those correlations changed a few years back, right? As we know, a lot of correlations changed a few years back. You know how we talk about how the bond market rules all and the bond market is the bully in the room? I think those changes in relationships started with the bond market and have impacted some of the derivatives thereof, these two in particular now.
Yeah. Yeah, we've seen a lot of changes in a lot of intermarket relationships.
So is that why this chart only goes back to 2021? Because that's when that's about.
No, I just kind of wanted to show this particular relationship. There's no, you could go back much further if you'd like, but I just wanted to show sort of this particular period in time, which is the last 4 months. But it's not technology. Technology is actually down almost 5% over the last 2 months. You know, it's not consumer discretionary. That continues to fall 2 months in a row now. Small cap tech down 7.5%. Small caps in general negative for the year. You know, it's just a different dynamic this year than it was last year, right? And this is a perfect example, right? No,
Does it continue this way?
Not here.
is it continue this way, meaning the relationship will
Yeah.
continue, or that both of them keep going up?
Such a strong positive correlation. I don't think that continues, right?
I think it does.
This strong.
I think the positive relationship between the dollar and energy continues. There's no evidence at all that suggests that it's just going to randomly change now all of a sudden. What do you see that would suggest to you that this relationship is now all of a sudden, completely out of nowhere, going to totally change?
I don't know if I'll ever get used to the dollar moving in the same direction as commodities.
Well, it's funny that you mentioned that, because a lot of investors I've noticed are having a really hard time adapting to the changes in the relationships. You know, they're like, well, my whole career, treasury bonds were a safe haven. Well, that's your problem. They're just not now, right? And if you are too stubborn and you're so mentally weak that you can't overcome your prior biases, that's on you, bro. That's on you. I'm not taking Strazza specifically, but you brought up a really interesting point that a lot of investors are having a really hard time just being able to adapt to what's actually in front of them, like what is actually happening. So they're like, well, in practice it works, but in theory it doesn't make any sense at all.
But isn't the other side of that argument that this is just recency bias? Yeah, sure, bonds haven't worked recently as a safe haven
For years now, though. It's not like the last week or the last month. This has been going on for years already, Spencer.
Recently being like a couple of years. I don't mean like this year, like a couple.
No, it's not so much a recency bias as it is acknowledging facts in the prior years that are just much different relationships than what a lot of us have been accustomed to throughout the majority of our careers. That's really my point. It's not so much recency bias as it is recognition of a change in relationships.
It's been 3 years though, right? Like it's not a dislocation in a relationship. It's a change in a relationship.
Yeah, it's a change in relationship. It's not a bias. I don't really give a shit, right? Like I don't care whether they move together or not. They're just moving together.
it's a bias to the last few years as opposed to like all the decades before that, right?
It's not a bias.
We've had a long bias on these assets.
Yeah, there's no bias at all. What are you talking about?
You're putting more of an emphasis on the most recent history than all the decades before that. That's what I'm saying.
That's not a bias, though. It's just a recognition of a change in relationship.
There's a lot of biases. It could be one of the biases.
I mean, I feel like that's pretty much what recency bias is. No, I mean, I could be wrong, but I feel like that's
recency bias. Recency bias would be, I'm a growth investor. Why are you a growth investor? Because growth stocks have been working for so long. Recency bias is, I only trade American stocks. I don't need to have international exposure. So that's recency bias, because not having international exposure has been a very good strategy, and having any international exposure at all has taken away from overall returns had you only been in the United States. Those things are recency bias. I don't trade commodities. Recency bias. Right?
For the record, I'm more or less playing devil's advocate here, right? Because I agree with you guys, but I'm just
I appreciate that, Spencer.
This seems like something that you yourself would say, which is like, why discount all the years prior to this, right? When
I'm making a point to say how different the last few years have been to those years prior. I'm actually pointing that out.
Here's what it is. It's the change in the inflation regime, right? Normally, if nothing changed with the inflation regime, we'd look at dollar and commodities moving together and say, this has to come undone, right? These can't keep doing this together.
Yeah, you're probably right. That's not a coincidence, right?
Strazza is right. And I don't know how often you hear me say Strazza is right, but he's right. And this goes back to like books we studied decades ago, like preparing for the CMT exam and stuff like that. John Murphy talking about these inflationary regimes and the relationships in those regimes versus the deflationary regimes that most of us have been accustomed to over the last couple of decades, and how those relationships are. We're in an inflationary regime where stocks and bonds trade differently, obviously, amongst one another compared to what it used to be, right?
If I said, excuse my recency bias, but coffee is the best thing in the world, I probably am not going to feel that way this afternoon. But I do feel like just shouting out coffee today. It's just really good.
All right.
Well,
Coffee.
recency bias to be the first sip of coffee is the best. Right? There is nothing beats the first sip of coffee. All right. Anyway, what else we got here?
My wife is such a psychopath.
Dunkin' girl.
That
I hate Dunkin'.
When we lived in California, we'd be going up to bed, right? And like literally going up the stairs, and she would be like, I can't wait for coffee tomorrow morning.
Yes.
I'm like, you are out of your freaking mind. Like, you are insane, woman.
Yeah.
She used to say that all the time, going up the stairs to go to sleep. Can't wait for coffee tomorrow. What?
Coffee now, similar to relative strength, is a hell of a drug.
Coffee's good, man.
Yeah.
I stopped drinking them around like anywhere between 10 and 11 is really where I stopped drinking coffee. After that, it hits me. I start having issues. I can drink as many coffees as I want before 11. I can have 10 of them. I can have 3 of them. Doesn't matter. After that, it starts affecting me. So, you got to be smart about it.
As if he doesn't get enough love on this show, but shout out to Phil Perlman, who turned me on to black coffee. I was never a black coffee guy until Phil really got me on
Why?
that.
What would you put in it?
Just a little bit of half and half for some cream. Nothing
There's
crazy.
nothing wrong with There's nothing wrong with half and half. That's on the Perlman program.
Yeah, black coffee is the way to go. Now,
He goes hard.
Black coffee is the way to go, but there's nothing unhealthy about a little bit of milk or a little bit of. I drink it mostly black myself. I don't use cream, but that's not the point. It's not the end of the world.
No, I'm not. But I'm not one. I was never one of those psychos that puts like 4 creamers in their thing, right?
Dude, I know some of those people. Those people
me
need to be
too.
locked
They're
up.
nuts. Anyway,
Need to be locked up.
Moving on. Okay.
There's a direct correlation between the number of Splendas one puts in their coffee and craziness.
Yeah.
Like in the hot crazy matrix, there's one of those for like Splendas and sugars, and you are on another planet in terms of insanity. Yeah, definitely. All right, so I got another one for you guys. Because I call out people for cheating. Strazza is the biggest cheater of them all historically. So I just but I'm gonna face the music here. Throw up slide 3 here. Throw up slide 3.
What's this?
Yeah, what are you doing here?
The footsie or is it Fitzy?
This is the FTSE.
Okay.
FTSE 100 index. This is London. What are you guys laughing at?
Did you say Fitzy? That's like the NVIDIA.
This is the FTSE 100 index. What's wrong with the?
Call what you want. Yeah, that's right, Steve.
So this is the FTSE 100 index. There is 0.0% technology, Spencer, if you may.
There's more technology in Canada than there is in
0.0, Spencer.
Yeah.
That was a layup I gave you there.
Oh, sorry.
0.0.
So good. Come on. I threw an alley-oop there for you, and you totally went over your head.
I was distracted. I was too busy. Yeah, okay.
So this is the London FTSE 100. Speaking of recency bias, I'm glad that this conversation got brought up because of London's lack of technology exposure and overall growth, it's done shit for decades, right? Meanwhile, Qs and S&P line go up. Plenty of tech. No tech here. And that is why the London FTSE 100 is making new all-time highs, because it doesn't have technology holding it back.
Technology holding it back. It's funny.
Funny why?
Because how many times could you say that?
I disagree with this. I disagree.
You disagree that the reason this is making all-time highs and the United States is not has nothing to do with its exposure to natural resources and lack of exposure to technology. That's what you're disagreeing with?
FTSE was outperforming or performing well back in January when tech stocks were at all-time highs. No?
No.
See, FTSE wasn't making new highs then also?
Flirting. But the outperformance has really shined now that technology has been struggling and the other areas are outperforming.
Things like the DAX making new highs,
Yeah,
right?
the DAX was making new highs, had nothing to do with technology. The DAX has one tech stock.
That's my point.
Yeah.
Tech stocks were still trading at fresh highs
Yeah,
earlier
but the
this
DAX
year.
was making all-time highs because
Absolutely relevant.
industrials were leading that sucker. You know
That's
that.
my point. That's my
Yeah.
point. This is not about tech sucking. This is about them being in groups that are really working. I don't think we could say tech stocks are not working. I don't think that's fair to tech.
Tech's down 5% over the last 2 months, while the London FTSE 100 has absolutely ripped to new all-time highs. So, yeah, I would argue tech has sucked. Large cap tech, most definitely. Small cap tech down 7.5%, sucks even more.
Wait,
So, yeah,
point of
sucks.
point of clarification. I just went onto the Russell Index's site. According to their fact sheet, there are 2 companies in the technology sector in this index.
Tell them, Spencer. Ha.
Yeah, and they total less than 1% of the overall weightings.
If you round up, it's 1%. It's
Oh,
close.
you have to round up to get to 1%. So,
Right.
in other words, 0%.
Point of okay. What else we got here? We got.
I think you're making my point that you have to round up to 1% to get there. Spencer, I appreciate you backing me up here on this one.
12% industrial, 13% healthcare, 10.5% banks, 8% drug and grocery stores. Okay, that's probably Tesco.
Hold on. I want to make this conversation about tech now. Are you done with tech, JC? Or
what do you mean done?
Like, did you really believe that tech is bad? You don't want tech in your indexes? I think
all I said is tech has sucked over the last few months. That's it. Small ones have sucked more than the big ones, but they both suck.
Are you buying this suck or no?
Am I buying technology like today?
Yeah.
No.
Why?
Because they suck. Yeah, why would I do that?
It's a technical term.
Yeah, why would I do that? You know, we have our meeting tomorrow. We've been selling premium. It's been working. I'll probably do something similar this week again. Keep collecting income. Yeah, why would I buy the worst sector in America, or
worst
Earth for that
sector in
matter?
America? Let's check the stats on that.
Yeah, over the last couple of months. Yeah, what's wrong with that?
Over
Utilities.
the trailing.
Why don't you throw up something that doesn't suck, Spencer?
What time frame? What time frame?
Throw up. My time frame is now. Okay. Can you throw up utilities there? Slide 4. Here's something that doesn't suck, Strazza. Utilities making new 12-month highs. You know what's not making new 12-month highs is technology, because it sucks.
So technology's up 8.6% on year-to-date basis. I'm using my equal weight sectors. You can't check at home. It's only second to energy. From
technology over the last 2 months, which is what I'm talking about, not these arbitrary year-to-date numbers that you're bringing out. Over the last 2 months, which is specifically what I said, technology is down 5% over the last couple of months. Small cap technology is down even more.
Yeah, there are communications, consumer, healthcare, real estate's all worse.
Communication is not as bad as technology, actually. Communication over the last 2 months.
Sectors. You don't have the data.
Communications over the last 2 months is down less than 1%, while technology is down almost 5%.
You're looking at the large cap sector spiders, I guess.
Because we live in a market cap weighted world.
Yeah. Now, when it's convenient, I guess.
All right. What do you mean when it's convenient? You want to look at equally weighted sectors? We could do that. Is it going to make you less sad if we look at them equally weighted?
No, they're similar.
I know they're similar. I have the data too. Remember that. Let's see, just for shits and giggles, just to make Strazza maybe less sad. Let's see, on an equally weighted basis, right? Because the equally weighted charts make Strazza less sad. Technology on an equally weighted basis is the worst sector on planet Earth, down even more on an equally weighted basis over the last 2 months than on a cap weighted basis.
And why are you looking at this arbitrary last 2 months time period?
Because things changed 2-3 months ago. That's when the transition started.
So over a trailing 5-day period, tech is your top performer.
Okay, so you're betting that all of a sudden this trend that changed 3 months ago now is changing again, is what you're saying?
I see the high for tech on March 21st. So we're about a month into this. sell-off.
I guess.
Yeah. So it's counter trend in nature.
But you're talking about a high that couldn't hold for more than a
oversold.
day or two. These are not highs. There were no stocks going up. Literally no stocks going up. That's why the indexes weren't able to hold those highs, because things changed prior to that. We've talked about it 1,000 times. It's just math, Strazza.
One of the, well, I'm just looking. We had 29 new highs yesterday. To throw out tech
29 whole new highs, right? Out of 5,000 stocks, 29 of them were able to make
in tech.
Right.
So not out of 5,000, out of 1,000. I think it's a grave mistake to throw out tech stocks right now in the middle of a bull market.
Who's throwing them out?
No, I don't like the way you're talking about them.
People take it personally that they suck.
Be nice to tech.
No, let me get this
tech
out.
stocks, JC. I'm a millennial, and they've treated me so well my whole life.
They have treated you well. Guess what? They've also treated you well this cycle, last cycle. There's a secular thing going on for tech stocks, growth
Nobody's
stocks.
disagreeing with any of that, by the way. When we sell premium, we're looking 45 to 60 days out.
Right. So that's the disclosure I'm giving.
So your multi-decade secular regime is irrelevant.
I'm not talking about decades.
In that time horizon.
I'm talking about the primary trend. You're right. Tactically, things are messy. If you want to trade counter trend, great. But for most people with longer time frames in mind, you don't want to throw your tech stocks out right now.
Shout out Duncan.
Bull market, right?
Shout out JC's wife.
Duncan just shows up.
You want to buy dips in things like Apple and these semiconductors. Semiconductors are red hot again.
Red hot?
Yeah. You went to sleep for a week and you missed this. Semis are absolutely working again. These groups are going to,
but they're down over the last 2 months.
Working, tomorrow, next week, or next month, but they're going to keep working and they're going to keep trending higher. Maybe they don't outperform, but I think you want to continue to be in these names, particularly the highest quality ones.
Let's take a step back.
Yeah,
which is exactly what we're doing tomorrow night.
Yeah, I'm excited for you.
We're taking a step back at the beginning of every month. We zoom out and we look at these monthly charts. And you know what you're going to find, Strazza? You're going to find that your technology that's so near and dear to your heart, that makes you so emotional.
You peaked.
Line go from the lower left to the upper right. That's what you're going to see in these charts.
That's right.
And that has nothing to do with what I'm doing now. I'm not throwing out tech.
Right. So we're
just not going to buy technology, which is the worst sector on planet Earth. So for you earthlings out there, technology, the worst sector on planet Earth over the last couple of months. You can buy them if you want. And we live in a free country. You are welcome to do that. But what I'm going to continue to do is I'm going to sell a premium and I'm going to collect income. I'm going to continue to collect income successfully, in my opinion.
Sell the premium buy the calls
from those investors that do not have the patience to wait for an upside resolution, which, for the record, I agree with you, is most likely going to occur at some point in the future. My suspicion is that will be much later after we've already taken profits and collected that income. In my opinion, that will happen just after we've taken profits from those who are not patient enough to wait and want to be buying messy markets in underperforming sectors. That's my bet. That's the bet I've been making. That's the bet that continues to work.
Yep.
People over the last 3 months, JC, why are you fighting trends? You're a trend follower. JC, your narrative, bro. It's just math. Those things that were working last year have not been working this year. A lot of the things that were not working last year are working this year. It's just different. It's not better or worse. It's not bad or good. It's just different. And a lot of investors have a really hard time adapting to changes in market dynamics. I've had a hard time with that myself throughout my career. I'm not perfect. I make mistakes. I will make more mistakes. But I can tell you for sure that I suck less at adapting to markets today than I did earlier in my career decades ago.
Fine. You agree that for most people, buying dips in tech stocks, not a bad idea right now.
I don't know if I can be any more clear.
Yeah, you keep talking to yourself.
I don't give a fuck what other people do with their money. It's not my business. what other people do with their money. I can't control what they do. I don't care what they do. It's not my problem. It's not anything I think about. I don't care at all what
Wait.
other people do with their money. It's none of my
Let's see.
business.
I think I think I've got this one.
I really don't give a shit.
Larry.
Why would I care what other people do with their money? That's none of my business.
I don't know. Just a little. We're out here talking to other people every day. Maybe care a little.
I'm not talking to anybody. I'm talking to you. I'm talking to Spencer. I give a shout out to the homies. What's up, Dawson in the house, Wavy in the house, Jason in the house, Andrew, Peter. I love them all. I've met a couple of them right over the years. I don't give a fuck what they do with their money. Larry, I love you, buddy. Do what you need to do for you.
Okay. So, then I'm going to bring on, speaking of not caring, I'm going to bring on today's guest who I hope we care about. But
I care about Ian McMillan personally. Right.
Yeah.
He's a hell of a guy, father. He's the man.
You care about people's perspectives. You may not care what they do with it, but you care how they think. So,
indeed. And Ian is one of those.
Yeah. All right.
So are you, Spencer. Don't listen to what they say about you.
I got a new one for you. I want to do. We don't even have time for earnings. This is coming off the rails. Bring on McMillan.
Fine.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ian Mack in the house.
How's it going?
What's up, my man?
How are y'all?
How you feeling about that draft? Did all your favorite cocks get to the teams you wanted?
Yeah, I guess so. That's good.
Yeah. What's the cock that we need to be focused on coming into this year? Who's the guy?
I mean, probably the obvious with Xavier Legette.
Yeah.
Yeah.
He's the man.
Pretty good. I think he went 32, the last pick of the first round to the Panthers.
So he's going to be legit, huh?
I mean, it's the Panthers, so it's tough work. That's a tough franchise to get drafted to, especially as a skill player.
And you think there was a little bit of like a home bias situation there? Like he's from that area, went to South Carolina.
Yeah. The Panthers unfortunately have a lot of Gamecocks on their roster that have, sitting there at 2-15.
All right. And KC, you're happy? Right? Kelsey, right? So Ian McMillan, he's a Gamecocks fan in college, KC fan. Speaking of recency bias, no, just kidding. Who did KC pick up?
First round, they got that wide receiver out of Texas. Kind of like they're trying to do the Tyreek Hill thing, little speedster. We'll see. I'm not a firm believer that you can just find a track star and put him on a football field and tell him to run in a straight line and replicate what Tyreek does. But I guess we'll find out.
I'm into it. I love the track meets on the football field. It's freaking awesome. So much fun to watch. All right. Let's talk. Why don't you give the folks, for those people who don't know Ian McMillan, Ian McMillan, he looks at the market from a technical perspective, but why don't you talk a little bit about your day job so people understand from what lens you view the markets, time horizon, and all that?
So day job, I work at independent RIA outside of Milwaukee. My boss has also been on here for a while. Yeah. So long story short, we manage money for clients.
That's it.
That is my job. That is what my world revolves around as far as my career goes. Beating the S&P 500. That's my vision.
Got it. So then are you ETFs and stocks, or ETFs only? Both?
Well, we debuted our own ETF in 2022. So that is our individual stock sleeve. And then, the rest is ETFs.
And what's the ticker symbol?
ADPV. ADPV.
Once you get it up and running, getting up an ETF up and running is not a pleasant experience. But once
No,
it's up and running, is it good? Is the
yeah, I mean,
are
we
the people
trade
paying or
once
not
a
really?
week. We trade once a week, Monday mornings at the open. So it's really not a massive, now from a compliance standpoint, yeah, huge undertaking. But from a trading perspective, pretty easy.
All right. So what are we thinking here? The debate is, I don't know when you popped into the green room, but Strazza wants me to be buying tech stocks when tech stocks keep underperforming over the last few months.
Time frame.
I am in the camp that for the next foreseeable future, we're selling strangles, putting on iron condors, looking out 45, 60 days. That's been working. I think it's going to continue to work. I think ultimately technology does break out, but I'm going to be very patient with it, and we'll worry about it if and when the time comes. That's the debate here on the table.
I mean, what part of tech, like XLK or
big caps? Yeah, so XLK is fine. The primary trend is higher. You're saying these stocks suck. They're market leaders still, and it's the middle of a bull market.
They're just the worst sector over the last several months. So that's all I'm saying.
I don't know. Sounds like
they're they do have an upward sloping 200-day relative and absolute, but relative. I think yesterday it got back up above that. It was below that 200-day.
Yeah, it's flat. It's a flat 200-day on a
And
relative basis.
whole failed breakdown in Apple makes me wonder if that's going to go. Yesterday's candle wasn't that great, but I could see. I mean, what do you have above a relative 200-day right now? Energy, financials, industrials, and
materials still
services. I'm kind of skeptical on the communication services, but I guess as long as Google does what it does, then financials too. Financials kind of fell apart here lately on a relative basis, but
to your point, Ian, you're having a difficult time identifying these. We're talking about technology on a relative basis below its 200-day moving average, which is flat, by the way. Communications maybe, but not really. Energy's right at it.
Yeah, energy's right there.
Ian, sounds to me like a messy market.
I mean, we had such an easy market for like 5 months.
Yeah.
Last year,
it's a lot. Ian, it's a lot harder compared to the last, Q4 and Q1.
For trend following systems, it's been difficult this year because those trend following systems are not designed to identify a lack of trend. They're always looking for breakouts in an environment where, right? You know what I mean? Like that's the type of market environment we're in. We're not in a trending market. Haven't been. So why are we just going to assume that we're going to enter into a new one out of nowhere?
I think the trend is still higher.
I think the trend is still higher over the long term.
Time horizons, folks. How many?
Yeah.
Ian, you say it all the time.
I think
Strazza, you say it all the time. I say it all the time. This is what that is.
Yeah.
Yeah.
Time frames.
All right.
I don't know if we're going to get to new all-time highs anytime soon.
What is your time frame?
In what? Hold on. In what, Ian? New all-time highs in what anytime soon?
S&P.
I agree wholeheartedly.
But I don't know if we break 40. I don't know if we break back below 4,800.
I agree wholeheartedly.
So, yeah, I mean,
too much. It's a
it
fucking
could just
mess.
be one of those summers.
It's a mess.
Yeah.
Everything Ian just said, I couldn't agree more. I don't think we make a new all-time high. I don't necessarily think that we break down either. Just churn sideways. Everybody loses.
And I do, if tech continues to be an underperformer,
continues.
How much, you just need a lot of other things to step up.
Do you think the market was a mess in February and early March, or do you think the market was firing on all cylinders?
I think that the market was very strong in February and March.
It was starting to get messy. It was less
You-
strong than it was last year. We
you
have
have
the
a low
data. It's not
bar.
an opinion.
Yeah,
Sir.
I
You
can
have-
see that happening under the I mean, I'm staring at, S&P. I worry about S&P because to market, right? That's my context of the market as S&P, because that's my benchmark and that's what I, for lack of a better phrase, worry about. But yeah, I mean, under the surface, like the whole Russell falling apart yet again was such a. I mean, I don't know why I'm surprised.
Right.
But I was hoping we'd stay above 2,000.
So you guys make trades once a week. You have a pretty long time frame for the fund. What, like, do you define it?
Yeah. I mean, we don't have a ton of turnover, maybe.
Yeah.
One buy sell a week, but the idea there is we want to be involved in trends for weeks and months at a time.
That sounds lovely. Then what are you doing with your tech stocks? Have you been reducing, or are you adding on this weakness?
So inside, you mean inside the ETF?
Yeah.
It's completely non-discretionary. So we don't pay. We built the system.
Yeah.
But I'm not in there deciding whether we should add or tell something.
Cool. Has the tech exposure been going up or down, I guess, is my
It's
question.
stayed the same. If you go to now, this is as of this is as a month ago.
Yeah.
It was still our largest sector up there with industrials.
Two market leaders.
Yeah, technology peaked at the end of January, really. You had a couple of breakouts that tried, like maybe in March. All of them failed very, very quickly.
Aren't
That
you
was while the new
tired
highs list was
of this?
deteriorating, right? So yeah, it's really been a 3-month period of just a mess.
Yeah,
Technology's
and
just easy to pick on because it's such a big component of the index, right?
And look at NASDAQ versus Russell relationship. There's been no edge there. You had the late December, January move but I mean, since then, right? And I love to play in either of those pools if they're working, right? And they're beating
flat for
the
6 months.
S&P.
Ian, this is a great point, bro.
Yeah.
Seriously, great point.
Like zero edge there, and so
Yep.
I just sit here in S&P, and I'm like, I've stuck my toe in the water a couple times, and no edge there as of right now, which I would really like. Banks are really bumming me out. I think that for Russell to go, those have got to eventually get it. Other parts of financials are doing great, but banks and some
Capital
banks
markets
are
is
doing.
what
We actually bought a bank in the ETF yesterday.
Ooh,
And
love it.
I'm okay with the chart, Key Bank.
Hey now.
So
which
but-
is in a sideways messy
Key
range.
Corp.
So even the ones, think about it,
Yeah.
even the ones that Ian likes, which does look better than the regional banks index, Key Corp, is still in a sideways mess.
I think Key's going. The stronger regionals are starting to go. I like that, Ian.
Yeah, we got to get this thing over $15. But and again, I don't, if I'm sitting here looking at the chart, am I buying? I get why the system says that. And it's been a lot better year for momentum in general. I would say, momentum funds have had a pretty good Q1 at least. Obviously,
Why would you buy? Hold on. Why would you buy like a bank, for example, that's yet to break out, that's still in a mess, versus something like an LPL, for example, that's showing a ton of relative strength within the space, capital markets?
LA.
Is it because you're looking for bank-specific exposure within financials? Like,
Is there
how does
something to
that
do with
process work?
One being the other not being?
So yeah, again, I don't. The system, it's based on rankings, and the ETF itself is going to tilt towards lower nominal priced stocks because they have higher beta, higher rate of change. So
Like an
LPL
LPL is making new all-time highs, but
because
it's
everyone's like, "Why didn't you just
270.
buy Apple last year?" Well, the system is looking for things that are rallying hard from a rate of change in an ATR basis. and a $270 stock. Yeah, great chart. But it's just not going to show up there compared to something that's gone from 12 to 19 bucks.
Yeah. I get it. That makes perfect sense. I get it.
Ian, are you trading for yourself personally or no time?
Oh man, that is I don't do so. A third of our family's investable assets are in the model I manage for clients.
Got it.
And then the rest, I'll be honest with you, is like SSO. And that like I just like mentally don't have the time or emotions to also trade my and I'm getting enough exposure to my own ideas because client, like I said, we've got money, which I think is appropriate. I think that who's ever managed your money should, have some skin in the game. If clients,
good for you, because most yeah.
So I never worry about like, oh, do I own gold miners? Because I know, that I've got assets. I'm still kind of trading my own money. But as far as things outside that, no, I've really dwindled that down over the last few years. Definitely not. I'm not really into buy and hold, but it's just it's index ETFs, and really putting the pedal to the metal if we're in a strong uptrend or.
So will you move in and out of like SSO then?
Yeah.
Based on cycles. Got it.
Yeah.
So you're doing something.
And exposure. Yeah, it's really just more of an exposure thing to the S&P.
That's right.
I'm interested in your thoughts on gold and gold miners. Like, where's your head?
I like them. Gold. Obviously, if we're above this massive breakout level that everyone's talked about for years, hard move. Do we continue at this same rate we've seen since early March? Probably not. And then gold miners as well. If I look at GDX, we're above 33. I'm ready above a relative 200-day compared to the S&P. So,
Ian, explain going back to this relative 200-day. What does that tell you about the relative trend for
just
someone?
like
a great gauge, by the way, Ian. I really like that a lot.
Yeah, and it's something that kind of helps keep me sane. I've certainly moved away from a lot of the day-to-day action and stuff. So I think 200-day moving averages and understanding what direction they're sloping.
Yeah.
It's just a really good tailwind to have. I think it's a great box to have checked. You can outperform over the long term without an upward sloping 200-day moving.
This gets back to something Ari Wald said on the show a couple of days ago. I think last week he said, it gives me the ability to defend the stock on a pullback or defend the sector on a pullback, right? Like you guys are sort of saying the same thing.
Yeah, I'm like what we're going through now in the market. I'm much more willing to be patient, much more willing to say, yeah, it might be a shitty summer, but we're likely going to get through this and continue to the upside. I don't know what that looks like or how crappy it might get, but we've got, by all intents and purposes, we're like 2 years in to what should be a pretty decent multi-year bull run. That's the way I feel, especially now that we've broken up to above 4,800.
And here's another thing.
It indicates
not every bull run has to be the greatest bull market ever. It could just be a pretty good bull market or maybe not the strongest bull market.
I would say 03 to 07, not the strongest. We didn't even get to new highs. We didn't even break above the .com bubble highs.
Dow did.
Dow did. But yeah, and then so that gets labeled as a bull market.
It was a bull market. It was 5 years of up. And to the
Yeah,
right.
but what, and it was kind of the like utilities outperformed.
That's right. Utilities were an outperformer. Emerging markets, industrials, energy, financials, not tech. Tech was an
Not
afterthought.
tech.
All right, let's talk about emerging markets right now. Do you guys? You guys are U.S. only in the fund, right? Or U.S.
in
listed?
the ETF, yeah, but the other part of the portfolio can go anywhere.
So in the ETF, no ADRs, Ian?
No, they could dabble in ADRs.
Yeah, you can if they're in the it's based on Russell 1000 constituents.
Listed. Okay. So are you guys getting more and more interested in what's going on overseas? Are you adding exposure to some of these? Are you watching?
It's still early on for me on emerging markets.
Yeah.
Europe, I think Europe had a kind of a decent week last week.
They're emerging markets now?
No, but I'm just saying if someone forced me to go outside the US, I would look in Europe before emerging markets.
Yeah. So more
is
time.
China an emerging market, or is China like Notre Dame?
They're independent.
Good question. Yeah, because what's MSCI picks what emerging and frontier and all that are. And it's all based on like your middle
there's like 3 different that do it.
And it's all based on like your middle class. Like, do you have X% of your population has to be considered middle class? I think it's one. I think MSCI has something to do with that.
And they do whatever they want.
Yeah.
Yeah, I'm pretty sure they just do whatever they want, which I respect that.
Yeah, because it's Argentina is frontier.
Argentina bounces back and forth. Poland bounces back and forth. Turkey bounces back and forth.
Their classifications are different from the Committee on Economic Development. There's like a world organization that does them also, and MSCIs are different because they're a business. They made a big bet on China, these index providers.
Yeah, you think this rally is gonna turn into anything?
I mean, it's already been a big move off the lows for China.
Yeah. I want to see more momentum. I think, like you're saying, Ian, you need more evidence of primary trend reversals for these emerging countries and the emerging diversified indexes.
And I'm I just don't buy bottoms.
You don't buy the bottoms.
I just don't.
You learn that in technical analysis.
I gotta it has been a great rally, but again, downward sloping 200 day.
Yeah.
So for me right now, I see it. I see the China charts. I watch it, and there's certainly some great individual stocks out there, that are doing better than the ETFs, like your FXI or your Asher. Someone posted one of you guys posted JD chart recently?
Yep. Looks like FXI.
Yep. Getting a little pullback today. I didn't enter the trade yet. I was hoping for this. Lovely. I don't know. I think we'll be talking more and more about stocks outside of the U.S. as this year moves on.
Ian, a conversation we were having before you came on is the correlation between the dollar and commodities. Positive correlation.
That's something.
How does that make you feel?
Yeah, it's interesting. Commodities, I think, as a whole are kind of a mixed bag. Maybe it's one of those things. Maybe it's one of those things where it's just one of those relationships. I have a firm belief that these relationships are how we expect things to act based on the last 40 years and a falling rate cycle are just over the next 30, 40 years, or a lot of these relationships, X asset does this, and this means it's bad or Y for stocks, are like a lot of those going to get thrown out the window. I don't know, what does a dollar mean? What does it mean in a rising rate environment? I don't know.
It means, well, from what we've seen, a rising dollar in a rising rate environment means commodities over stocks, means commodities over bonds. That's what that's what it's meant so far.
Or Coco's getting hit for the second day in a row. I saw.
Coco getting the shit kicked out of it.
Yeah,
Down 30%.
that was a good run though. That's probably
That's
just all the
things
CPAs
end.
are getting down now.
Yeah,
All
it's
this probably
down
Jerry
30%
Parker.
back to
Jerry
what
Parker
last
sold his
Wednesday.
position. All the CTAs say, okay, that trend's over.
You know, that was a big move.
Wow.
That was a big move. Chocolate
I mean,
prices.
other than
through the
that,
roof.
like hogs have been strong.
You trading lean hogs these days, Ian?
I don't trade lean hogs, but I look at the charts. They took so many commodity ETFs away last year.
Yep.
And it's all like the K1 free ones.
Yep. That's
love the
information
K1
though,
free
Ian.
stock.
When the ETF providers are like, nobody wants this shit anymore, line go up.
They do.
Right?
Of course, they got copper getting hit today. We'll see.
Everything except the dollar and natural gas.
Nat gas, yeah.
And the VIX.
Is VIX up? Yeah.
And then what about natural gas? Do you think about it at all?
I think about it.
Do you?
I don't.
You don't think about it?
No, I should see we're back to where didn't we bottom back here?
A bunch of times.
Yeah.
But even though this historically is a great price to be accumulating, historically it also takes a while to get going. Right?
Yeah.
Time horizons, my friends. Time horizons.
Yeah, and hey, I know a guy that told me he was buying a shit ton of UNG back at $18. So
yeah,
I don't know. Like, we'll see. Just one of those trends.
Ian, the chat wants to know about your crypto exposure.
It's a good question.
I do own some iBit for clients. We'll see. We're stuck in this range, but a very good. And like, I've got plenty of cushion on the trade, so we'll see what happens in this range.
Yeah.
You're not
in a messy range like tech. Is that surprising?
Yeah, I feel like. I mean, I would think that the trend at some point resumes higher.
I agree.
But it could be a pain in the ass.
I agree. Couldn't agree more. Ian, I don't like this at all. You and I'm agreeing. I agree with literally every word coming out of your mouth, and I don't like it. I don't like it.
Find something to disagree on.
It's not the tech exposure.
Miami Hurricanes win the national championship. You agree with me on that?
No. You guys have had a good portal season.
Mario Cristobal grew up across the street from my grandparents' house. I saw this guy literally grow up.
That's awesome.
He was a star at like one of the local high schools.
Not the star anymore.
Did he go to Miami?
2 national championships.
Or he played there?
Yeah, early 90s.
Oh.
Yeah, he was the man.
Nice.
Yeah, his
got
father built my grandparents' house.
That's pretty cool.
We got a nepotism hire, so.
Sorry to hear that. Bring back Spurrier.
Yeah, I think Spurrier's playing golf these days.
He's like 85 years old, man.
He earned it, man. He earned it, that guy.
He did. He was good.
Wasn't he Florida State's coach?
Florida.
And Florida, bro. Come on.
He was Florida.
Get out of here.
Bowden was Florida
Who
State.
is this guy?
I just got here in Florida. I don't know what went on.
Yeah.
Bobby Bowden, bro.
Bobby Bowden, yeah.
Come on.
All right. Okay.
Ian McMillan, give everybody the ticker symbol one more time for the ETF.
ADPV.
ADPV. Follow Ian McMillan at the chart life, _chart_life. The chart life is a good life, Ian. It's a good life.
Yeah.
It is. It is.
Charts don't lie to you.
No.
Never have they lied.
Facts only.
They've tricked me, but never lied.
Touche. All right, Ian.
All right, thanks a lot,
Thank you
Ian.
so much.
All right, you guys have a wonderful rest of your day. Thank you so much for having me on.
All right.
Monthly candles tonight, baby. Let's go.
On the candles.
I like Ian's emphasis on long-term trend using the direction or slope of a 200-day moving average.
I really like that a lot. It's easy.
It's so
Anybody can
simple.
do it.
Notice how he kept going back to it. It's almost the way he thought it. He started his thought on anything we asked him. He would say, okay, what's that long-term moving average look like, right? And then go from there.
Yep.
I think that's just such an important thing. It sounds easy, but to train yourself to really do that does require discipline.
Well, why do you think he's so? Why do you think he's so chill and nonchalant? He just
I don't know.
reverts to that.
Oh,
That's
because
the
he's a
system.
trend follower. The life of a trend follower tends to be pretty chill and nonchalant, right? It's like a set it and forget it type of life.
That's right. It's the
You
ones who
identify
are the ones who like fighting trends. Those are the ones those are the people putting 4 Splendas in their coffee.
Yeah, and it's with all things in life. Like, you get in traffic and you start getting angry. Like, you're not following the trend. Get up maybe an hour earlier and beat the traffic, right? Trend follower life kind of permeates everything you do, and you identify trends.
Trying to leave New York City at 5 o'clock. You're never getting home.
Right.
You're an idiot.
Right.
Yeah. You're gonna be upset.
Right.
Right. Exactly.
So another loss for the Miami Heat last night. That was too bad. But
we don't have any players on the court.
I know it's too bad. I was hoping for them to win because I went to some playoff games last year and had a blast. I would have liked to go again, but they're just not good enough. Ideally, they could have won and played the Knicks, right? Wouldn't be this round.
It wouldn't be this round. It would be in the Eastern Conference Finals. I know that would have been awesome. See what happens.
All right, can we do some earnings?
I would love to do some earnings.
Tatum's just not a killer. If I were a Celtics fan, I would want him to go.
That's crazy. He's so good.
Okay.
Yeah, but he's not a killer. You need a killer. You play to win the game. You play to win the game in the playoffs. You don't play to win the game in the regular season. Tell that to those
maybe
Patriots or whatever.
Jason Tatum has some relative weakness in the playoffs compared to the regular season, but it's still in an uptrend.
It's not about relative weakness, it's about the intangibles. He's not a killer.
Okay.
He's not a killer.
It's earnings time. It's earnings time. Calendar, please.
Mickey
there
D,
you
Mickey
go.
D's.
All right. Big week, obviously, especially later on today with Amazon and AMD, and Thursday with Apple. But let's talk about, let's start with McDonald's here, down about 4% this morning on their report. Earnings, EPS actually came in a little bit light, which you don't see too often. Sales growth also light, just a smidge below where estimates were at. Same-store sales up 1.9% year over year compared to like a 2% estimate. They cited the Middle East as weighing on their international business there. But anyway, so yeah, the stock down about, what did I say, like 4% this morning. Yeah, so there's McDonald's. In the US, sales are up in line with estimates, 2.5%. So pretty consistent there. But yeah, that's what I got on McD. Mixed report. Stock is down.
Stock looks like a mess. Are you seeing how this is ongoing theme?
I kind of look at McDonald's as like the poster child for inflation, because I've seen more people complain about, like, just on the internet, on Twitter, not like in real life, but about the prices at McDonald's than anywhere else. So to me, it's I don't know.
Think about how fat you need to be to complain about the prices at McDonald's.
I haven't been to McDonald's and I don't even know. I couldn't even tell you the last time I had McDonald's. But yeah, people complain. I mean, the prices are going up. So
good. They should go up. What's the problem?
No problem for me.
I don't understand why people complain. Prices are going up. It's a publicly traded company. Their job is not to give you cheap food. Their job is to increase shareholder value. They should charge double. If that's what they feel they should do, I don't see the problem.
All right, but let's go to Eli Lilly. Their Eli Lilly's whole thing is about production capacity. Obviously, the demand for their weight loss drug is like through the roof, and they can only make them so quickly. So that was kind of the theme of their report this morning. The EPS beat, the sales missed, but they raised their guidance for the year, the revenue guidance, because they're going to be increasing their production capacity for Wegovy, right? I think that's I think that's the drug, right? I was confused which drug is with which company, but I think there's the Wegovy. So anyway, they're going to raise their capacity there, so they raised their guidance along with that. So the stock is up this morning. Thoughts on that chart?
What a beast. I like Strazza's conspiracy theory here, that this is all going to come falling apart one day, but I got to see it, and it hasn't happened, and this consolidation looks like it's resolving higher.
I would run from this chart.
I'm going to do nothing.
Yeah, me too.
I'm not going to run from a chart. Can we throw up that LPL chart?
Did we do PayPal already?
No,
Yeah,
I
can
was
we throw
going
up that
to
LPL chart just
go to
quickly?
PayPal next.
AC,
Wait,
there are 20 that look like this in capital markets. They all are breaking out above their prior cycle highs. I actually have a table. Fonz, why don't you
Throw it up quick, Spencer. I mean,
Just
look at
show-
this. Look at this thing.
Yeah, they all look like this. Houlihan, Loki, same
And
thing.
if you zoom out, it's even more obnoxious. But I tried to zoom in.
They're good companies, great businesses. Throw up the table, Fonz, if you have it, because the whole industry group right now, this is as good as it gets right now, just currently in the market. There's not an industry group trending better than this one. What do you think about that? Do we have the table?
Yes, we do. Slide 6. So this is the capital market sector. There's nothing trending better than this.
Nope. These stocks are so good.
You'd be hard pressed to find something trading better than this.
Yep. So what we're doing here on the far right column is we're simply comparing where the price is today relative to the prior cycle highs. So JC showed LPLA. That should be down near 0. You're not even going to see it here. It's off the list. But what we do is we sort the list to look at the ones that are closest. This one's sorted by the ones that are furthest away to show you the leaders. But when we're looking for new trades, we sort it by what's closest because those are perfectly actionable, breaking out right now above like well-tested and clear levels from the prior cycle. TradeWeb, you could see down here, this HTGC, Goldman looks that way, Hamilton Lane looks that way, Jeffries looks that way. So just a lot of them breaking out and looking a lot like the LPL chart that you just showed, JC.
No, and Strazza makes a great point here. And I just want to add to this. Strazza makes such a good point. This is such a good point, Strazza. Kudos to you for bringing this up because you nailed it. Why don't you throw up the next chart there, Spencer? Strazza made such a good point that the capital markets sector is the strongest out there. You'd be hard pressed to find a stronger one. Yet,
Yeah, it's good.
Despite all that, it's still a fucking mess. You know why? It's because the market is a mess. So thank you for reiterating that.
Yeah, right.
Dog.
So we're buying these stocks hand over fist right now. There will be a report on the blog today.
My point is, even the strongest industry group on earth that Strazza and I both agree is
we're not buying the index.
Still a mess.
We're not buying the index. You know what you're doing.
Fine. Nobody's talking about buying an index. I've never traded the KCE. I probably never will. But the components in there are what you're alluding to. That doesn't change the fact that the group, as strong as it might be, is still a mess. Because the market is in a mess. I don't understand why we can't just acknowledge that. It's been a mess for months. It's still a mess today. It's likely to continue to be a mess. You know why, Strazza, it's likely to continue to be a mess? Because asset prices trend. We know that. And if the trend is messy, there's a much higher likelihood that it's going to stay messy than for it to all of a sudden start trending again, right? So I'm going to call Sean, and Sean and I are going to look for the messiest shit we can find, and we're going to sell a strangle. And if it's not an ETF and it's a stock, we're going to hedge that by putting on an iron condor. And we're going to collect that cha-cha. And we're going to keep making it rain like that until the market data suggests that we should be doing something different. But all the market data continues to point out is that that's exactly what we should be doing.
I don't know why you're saying we. Some of us still have a directional bias.
Yeah, sorry to hear that. For the record, I have a directional bias also, sideways.
But you've been saying this mess thing. You've been on this mess narrative since late January, early February. So
that's exactly right.
That it's not.
First of all, it wasn't a mess
right now.
First of all,
it wasn't messy then.
It wasn't a mess at the end of January. The signs that the mess was beginning started at the end of January. And sure enough, it's been a mess ever since. What do you know? It's almost like if you count, there's a huge advantage there.
I don't know. Maybe.
No. It's not maybe. It's just a fact.
No, we can disagree. No.
Facts.
We're allowed to disagree.
There's nothing to disagree about. It's just a fact.
Just the whole messy narrative. When does it end? If we break out, reclaim old highs, all.
You know, I thought Ian. Yeah. I hate to keep agreeing with Ian.
No, he disagreed with you.
It's so much.
He said the market was firing on all cylinders in February and March.
He specifically said the S&P 500, not the market. That's
man.
specifically what he said.
Oh man, it's gonna sidestep that. Okay.
That's what he said. He goes, I have to defer to the S&P
Good.
500.
Oh, he's good.
Oh, that was nice, JC.
Let me ask you this. Let me ask you this, Strazza. When was the last time you traded the S&P 500?
Oh man.
I don't trade indexes.
Thank you. No further questions, Your Honor.
Okay, speaking of messes, let's bring up the PayPal here.
Yeah.
Remember back in the middle of January, CEO said that they're gonna the new CEO, I would add, said they're gonna shock the world. Well, they haven't really done that. This report, I guess, was all right. They did raise their guidance and they're doing some cost cutting, so the street likes that. So they raised their full year EPS guidance, and the stock is, it opened higher. It's been leaking pretty much straight since 9:30. But
they're selling it pretty hard at the open here.
Yeah, they are. So it did open higher, but that was a long 8 minutes ago.
Yeah, trading around the lows of the day right now. So this will be interesting. But to clarify, it's trading now above this breakout level drawn here with the horizontal rectangle. So we did gap above that this morning. This has the semblance of a breakaway. This is a breakaway gap. Almost a 12-month base, really shaping up here. You got the VWAP that we could drop from the August highs back in 2022, which is one of my favorite high ever, the August 2022 high. Drop the VWAP from there, it comes in, it can act as confirmation. We're slightly above it, ever so slightly above it right now. I think PayPal is buyable for a trade here.
Didn't see that coming.
Yeah, I do. I know, because the stock's been really bad for really long, but clear levels. I think we can buy laggards, things like Unity software or Zoom, even just down around the lower bounds of their ranges. I think there's something for traders in some of these laggard charts.
I agree wholeheartedly with Mr. Steve Strazza. I'm allowed to do that every now and then. Can we throw up this Trump meme coin that's just doubled in a couple of weeks, ripping in everybody's face? Come on.
This is now JC's largest holding. He's tactically bearish, but leveraged to the gills in DJT.
I don't have any short positions on, so I don't know who's tactically bearish.
I mean, you're killing it in this trade.
You know what's so great about this? I'll tell you what's so great about this.
And you tell me every day.
Lack of correlation with the overall market. It's its own beast. You have people that are very angry at this stock for reasons that have nothing to do with this stock. We've talked about this a million times, and we're going to keep talking about it. You know why? Because we're going to see it again. There's going to be another stock that people are just angry about. Like some guy last night was tweeting at me, like, that son of a bitch ruined my family or something like that. Like, what? What does that have to do with a SPAC, bro? Like, what is your family? I mean,
what's interesting about this is there was a time, a couple years, really, I guess, beginning in 21 and thereafter, when all the there was a strong correlation in meme stocks, right? And you could even extrapolate that to say that infamous Goldman Sachs most shorted basket, right? And one of them would go up, and they would all go up. One of them would go down, they'd all go. So you come in the morning, you see GameStop is up, I'm buying AMC, right? I'm buying whatever. I don't even remember what was in that group, but you get the idea. Now, that correlation is totally gone. So, and this right here, the DJT is really, like you said, it's its own animal. But if this were a couple of years ago, maybe you could have come in this morning, you see DJT up, whatever it's up now, I don't know. You come in, oh, I'm buying GameStop to go with this. I'm buying Avis, I'm buying Hertz, right? Because they were all
decoupling. You're right.
Totally out the window. There is no more meme. There is no more meme trend.
Spencer pointing out the decoupling of the meme coin mania. Spot on.
Robinhood.
The one thing I would change is the actual meme coins continue to struggle together. This one has stood out on its own as the publicly traded meme coin. Also trades very different. If you want to show, put up slide 3, the new slide 3 there. You could see the, what looks like a topping formation in the old dog with hat, right? So this is.
I think Spencer was talking about equities, though.
Yeah, I was firstly, and second thing, I don't think everything going down together is proof of a relationship. The real proof happens when there's a counter trend move, and then you see if they move together.
I think dog with hat is just a bellwether for the current market environment. I mean, it's just
Okay.
a classic messy market environment. Dog with hat truly shows that. Looks a lot like the capital markets ETF. You know, market leader. You can't argue that the dog with hat is not in a secular uptrend, Strazza, right? But within a shorter term tactical perspective, it's a mess. How is this not just another way to show the overall market environment?
The dog with hat capital markets. I think that was in level 5, that relationship, right?
The positive correlation between the capital markets index and the dog with hat, just off the charts.
Spot on. Yeah. Okay.
JC, change. It hasn't though.
Yeah, but you were trading these a few months ago, right?
Still am.
Okay, you're still involved.
Not just for years. I mean,
yeah, but I feel like you were on this early this year. No,
when all these were breaking out. Well, I mean, I hang out in the new highs list, right? I like the strength.
Okay, so they're all holding up. Like you're staying long these, or right?
I'm not in any of these things. I'm wondering if I could sell premium in the dog with hat. I would. Like if I could put an iron condor on the dog with hat, I would.
Yeah, no,
but I can't. So it's just so for me, it's more of like a market gauge.
You're
right?
long
like
a lot of Ethereum, aren't you? Just through your NFT exposure.
Long dog with hat.
No, Ethereum.
Long a lot of Ethereum, right?
Yeah, I mean, I have plenty of exposure to cryptocurrencies, but I'm looking at dog with hat specifically as a risk on, risk off gauge. Would you not agree that if we get a breakout out of this consolidation, chances are we are getting rotation into technology, we are getting positive rotation into equities, and it's Solana summer all over again. If dog with hat completes this top, chances are the market's either continuing to stay in a mess, technology is continuing to struggle, or perhaps things are actually getting worse.
That's
fair. Agree?
No, that's fair. I have similar instruments that I'm watching as well. Totally. They are not looking great. A lot of them.
Yeah.
All right, I have a few more things, and then we'll bring Patrick on. Alfonso went and made charts for Cameco and MicroStrategy. If we can bring those up, they're both down this morning. Cameco actually missed on their top and on their bottom line. You don't see that every day. So CCJ down what, like 5% now? Somewhere in that, 5%ish. And then MicroStrategy,
a great example, CCJ, of a former market leader that's having a hard time in this messy market environment.
I mean, it's having a tough time at a very logical level after going 10x. Yeah,
couldn't agree more. Just like the XLF.
Top line. The top line feeds the bottom line, right? So if the top misses, sometimes it's
that's true.
Too many lines. I just ignore them all.
MicroStrategy down 6% today.
What did people learn from their earnings?
I don't really bother looking at that crap. Here's what I'll tell you. They do hold 214,400 Bitcoin.
It's more than me.
A lot of Bitcoin.
It's a lot of Bitcoin.
All right.
They own about I think they own 1% of all the Bitcoin.
I'm going to take this question in the chat. Are we done with earnings? Do you want to finish up earnings?
We're done with earnings. A couple of headlines real fast.
I believe the theme has been a lack of earnings. I believe.
Let's
I would love to do the hot corner. In fact, we missed a good one from yesterday also.
Bring it back.
Okay, we'll do that next. Real fast. Pour one out for 3M. They said they're going to cut their dividend, so no longer an aristocrat.
Yeah, I meant to bring
the stocks making new highs.
Yep.
The market knew this 3 years ago.
Yep.
It took them 3 years to cut their dividend.
Yep.
You could see it in the chart. Charts that look like that are not dividend aristocrats. And if they are, they're not going to be for very long, right? We see this over and over and over again. The yield was too high. They fell into these legal problems. What were they doing? Something with the...
I think it was earplugs.
Like making people deaf or something?
Yeah, they had some issue with some earplugs.
Yeah.
Strazza's right, though, on this young aristocrat, Strazza. Preach, brother.
I mean, we watch these stocks. We watch them very closely. And when a stock trends like that with such a nice yield and such a nice growth history, something is wrong. Something is seriously wrong, and a cut is not far away. And now we're finally seeing it. This took a very long time. They could have cut this dividend probably 2 years ago.
And then last one for me, HSBC. Speaking of the FTSE earlier, the third largest winning is HSBC. Their CEO just up and I'm retiring. Peace out, everyone. So stock's at like a 6-year high.
Who's CEO?
He's HSBC.
And they wanted him to go?
It's the footsie.
I don't know if they want him. I mean, the stock is at a 6. I mean, they had earnings this morning, so maybe that's probably more relevant than the CEO retiring.
Yeah.
But 6-year high. So he, was leaving. Yeah. Anyway, all right. You want to do a hot corner? Let's do a hot corner, and then we'll bring Patrick on.
Perfect.
So hot right now.
MSCI. So we had 2 separate executives buying for a combined $10 million. This stock got absolutely slaughtered on earnings, I believe, last week. So they're out there buying the dip, buying that weakness. It definitely stands out. You do have a clear level here. I don't like the trend here because there's not one. You could see that from the sideways slope 200-day moving average. I think you could trade it off these lows though. And 2 buys from 2 insiders with size certainly stands out.
Question: what does MSCI stand for? I only learned this last week.
I have no idea. No idea.
You'll never guess it. I know what it is, but you're never going to guess it.
Yeah, I didn't know this. Is Morgan
Never, ever, you would never realize it.
Morgan Stanley Capital International.
Wow. I did know that.
You did know that?
All right. Yeah. So this is an old spinoff from Morgan.
Yeah.
All right. Another 2 more that stand out. And we're going to talk about
What does FTSE stand for? This is an easy one.
Financial Times, something.
Yeah.
I don't even know the first
something exchange, stock exchange.
Stock exchange.
AMAT, ASML. I love both of these charts. I think these are the dips. These are exactly the dips that I'm talking about buying in tech. It's charts that look exactly like these, right? ASML a little bit cleaner than AMAT. That's why we were talking about it on here last week when we were getting involved. You got this little hook higher, and then something like AMAT, you got the breakout completed, no retest, something that looks like a tiny little short-term top now failing. So this is not a top, and we're seeing so much of this in tech right now. Just over the last 5 days, a lot of the tactical damage is being repaired. Semis to the front of our list of favorite ideas. Next, let's do today's hot corner.
Sean, all these stocks, these messy messes that Strazza keeps bringing up, find me the one that's paying us the most to sell the premium.
Yeah, go for it.
I know, Sean, you're listening out there. These things are so ugly and messy. I just want to sell the calls.
Sean and I have been making some good money on the long side.
Sorry to hear that.
Today's hot corner.
Yeah.
Shout out Jupiter Asset Management. Diversified Energy Company Place, DEC. So that's an original filing, a new stake for this asset manager based right here in South Florida. Then the other one that really stands out is JB Hunt. Whenever CEO buys about $1 million, stands out. So JB Hunt. Truckers are struggling a bit. And this is what you tend to see, right? Earnings, stocks get blasted. The blackout period expires. And then executives come in and support their stocks. So JB Hunt, really no different from MSCI, scrounging on the range lows here. Again, these are trades, not something you want to buy for any sort of long-term time frame.
All right, let's bring Patrick on.
PD.
Oh, get the hot corner, guys. The link is in the description. Totally free. Goes out every day.
Great email.
Fellas,
Fire shop. I like
how
it,
you
Pat.
doing? You like it? I don't know, man. It really looks like rates peaked. You look at some of the intermarket divergences there. There's a lot of them. I have a chart there of the 10-year yield and Dixie, DXY, the dollar. And 10-year yield made a 5-month high last week. Dollar index did not. Now, it kind of looks like a bull flag on DXY, but I don't know. You had the same divergence in place at the October 2022 lows and the October 2023 lows. So I don't know.
I need to see it. The trend in rates remains up. The bond market keeps saying inflation's here to stay. I mean, I'm not seeing any evidence at all that rates have reversed. I need to see it,
Yeah. You look at crude oil too. You could add to the dollar.
Yeah. Yep. Talk to me about China. Let's go. Let's get into the nitty gritty.
China's finally looking interesting, right? It's been bottoming all year. It's kind of been slowly trending higher, but you got a big breakout last week. Broke that downtrend line and the 200-day moving average. So looking pretty interesting there.
What are the technicians out there saying? Anybody talking about this? Is it quiet out there, or people?
It's quiet. Everyone I talk to about China, they don't want to hear it. They're over it, and that's kind of the sentiment that you want to hear, right?
Recency bias, Spencer. That's what that is.
Right.
Best week since January of 2023. Last week for a lot of the Chinese indexes.
Yeah, and a lot of them are kind of looking bottomy. You look at JD. That one has a really nice head and shoulders, right off long-term support. And people just don't want to buy these names because they've been burnt so many times. They just don't want to hear it. So
you have a trend line break shown in your chart here. That's how I have all mine marked up too. I'll drop one in.
Yeah, and Steve, you're a big Wyckoff fan, and that's kind of how bottoms work, right? That's the first step you have to go through in order for a long-term trend reversal. So things are slowly shaping up.
Breaking a long-term trend line like this does not mean that the trend is changing, but the trend cannot change without breaking a long-term trend line like this. So this is often the very first step to a trend reversal. Right now, we want to see things like overbought momentum readings, which some of the Chinese indexes already have, flipping it to a bullish momentum regime. You want to see this 200-day that's prices piercing right through right now, flatten, and then slope higher, right? You also want to see a well-defined level reclaimed, right? I think this shelf here where you have it drawn, that works. Just identify something, right, that you can lean against. Then, in order to get long, sure, there could be trend reversals without trend reversals in the relative trend. But if I'm going to buy something, then there's a fifth step where I also want to see a trend reversal on relative terms as well. So a 200-day that begins to slope higher on a relative basis. So China still has work to do, but we're moving in the right direction. We're starting to check some of these early trend reversal boxes.
Yeah, and I think copper is really supportive of that, right? Copper's kind of opened the door to all-time highs. It's kind of broken that last resistance level that it needed to. So if copper is breaking out to an all-time high, I mean, you look at copper and China together, pretty tightly correlated. So kind of getting that confirmation there too.
Great point, Pat. Yeah, I'm interested in China.
Wavy in the chat here says long China, short Japan. What do you guys think?
I don't know if I would short.
I like that. It's the same thing. The short Japan is like having short the S&P 500 as the denominator, which I've been a big fan of for months now. It's kind of very similar.
You know
long
what I'm
China,
into?
Long China, short Japan is like a long China, short America, which keeps working, obviously.
I do like a variation of what he's saying. I like long China, short India. I'm looking for a big unwind in really just the blow up in exposure, emerging market exposure to India. What emerging market fund managers have ultimately done over the past several years is remove China and add India. So EM exposures are now almost even between India and China. Not long ago, China was 4x the exposure of India in emerging markets. That has completely changed to almost par. I think that's going to unwind and move back in its traditional direction, where China becomes a large overweight again.
Strazza doesn't know anything about what a par is. More of a double bogey kind of guy.
I had two yesterday. But
so did I let you play in the adult course yet, or is this still the?
I think China's 25% of EM.
I'm getting so good at golf, guys.
I've heard that before, and then I've seen you.
I'm getting so good. It's crazy. JC's not ready. July.
I hope you have gotten good. I mean, I'm rooting for you.
Update on this. We should have Giancarlo come record. They probably don't allow that. Too nice of an establishment. Pearls is in. It's gonna be me, you.
Will we play at my course?
Pearls. Yep. Second week.
One of my courses is open 12 months a year, right?
That's crazy though. Who wants to do that?
You always get a nice day in December, a couple of nice days in December, a couple in April, March.
I would rough it. You wouldn't.
I got one.
Give it to me.
Slide 2.
Ooh.
Go for it. Ready? This one is near and dear to our heart. We talked about this on this show. Boom! The Mediterranean Chipotle hitting new all-time highs.
Yeah, so this one does get a lot of Chipotle comparisons. Is that fair? I've never been there, so I don't know.
Pat,
Spencer went once.
Pat, wasn't this in one of your reports recently, your scans recently?
Yeah, no. I think that's a perfect way to describe it. Mediterranean Chipotle.
Pat eats there a lot.
I wouldn't say a lot, but it's good. It's good. You guys should definitely check it out.
Fine. It's fine.
There?
It's fine.
Just get a bowl.
Spencer, not a fan.
It's fine.
I haven't had it, but Spencer's probably right. It's probably just fine. Right?
I would agree. It is just fine, but
It's not for me.
But as far as a company and it catching on, I think it's got a chance.
Guys,
do we have any Greeks out there or like Turkish
me.
folks? Are you offended by this? Like, how do
I'm
like,
Greek.
when you like are Mexicans offended by Chipotle? Probably, right?
No, well, I don't know. I mean,
Chipotle.
no.
That's
I
a
don't
good question. Probably.
Like when I walk into a Cuban restaurant and they have guacamole, I want to smack the maitre d', you know?
They don't do that down here.
Cubans don't do guacamole.
I know.
No, that's what I'm saying. So like, do like Mexicans feel that way about Chipotle? Do Eastern Mediterranean folks feel that way about kava? I'm asking.
I don't know. I'm American and I'm not offended by McDonald's or Domino's. So
You should be. It's gross.
all right. Let's maybe do some recess.
Throw up the China-India ratio just to show people what's going on here. This is what China looks like on a relative basis versus most things right now. India's been a tough benchmark. Maybe not just recently, but this is FXI Indy. So this story is starting to play out, right? It's bullish China story. Anyway, nobody likes it.
All right.
Thanks for sharing my chart.
Recess time. Thanks,
Good
Steve.
talk. As a good.
So I will not be on Chart Request Live today, unfortunately. The boys will have to chart without me. I'm meeting my favorite All-Star Charts people, the Chaffers, for lunch.
Woo!
We're gonna have some ceviche. Their daughter actually came down, spent some time in Key West, actually Stock Island. Shout out Stock Island, that's where I live. And I'm a man of the community, so I helped put her in touch with some people, and she painted one of those giant street murals on one of the buildings here in Stock Island. So her parents are coming down to see it. We're gonna go out for lunch. I'm very excited about it. Always love seeing the Chaffers.
Very cool.
Shout out Brett. Shout out Carrie. We were talking over the weekend. They were in Miami and they wanted to go to Little Havana.
Yes.
So I made a couple of recommendations. I told them to get a colada. I told them not to drink the whole thing. I told them to have a little bit and then share with anybody who's around them. You know, I gave them the rules because they don't have any tolerance for that sort of stuff. If they knock down a colada to the dome, they're going to be bouncing off the walls, man.
Yeah, Cuban coffee is wild.
Yeah.
Did anyone see Brett's message last week on like Wednesday at like 6 a.m.? He was the only person in the gym except for
Jeff Bezos.
Jeff Bezos.
Yeah.
So there were three. Carrie was there too. Don't forget Carrie. There were three people in the gym. Brett, Carrie, and Jeff Bezos. And Brett said that whenever Jeff Bezos would get off of a machine, he would go on it and increase the weight. I thought to do with Brett. Shout out, Brett. I see you, dog. I see you.
Oh God, that's great. Yeah, I got nothing for recess. So unless anyone else has something.
Best white wine recommendation. If it ain't broke, don't fix it. Chardonnay from Burgundy. Done. What is that face you're making?
I'm not a Chardonnay person.
I'm not making a face.
You don't know what Chardonnay is.
Yeah, I don't like it.
You can't like something that you don't even know what it is.
No, I definitely don't like it.
You don't like Napa Chardonnay.
Ugh. I hope we don't have any when we're up there.
What do you drink? Out of curiosity, what do you drink with your caviar?
Rosé.
You drink rosé always?
With my caviar? I mean, you can have an old fashioned with caviar. Some people like martinis. I'm not really a martini person.
Oh man, you gotta drink
champagne.
You're supposed to drink vodka with caviar. It's a Russian thing. It's a whole Russian.
No.
It is.
No, I'm sure, but to be fair, Russians drink vodka with anything, caviar or cheeseburgers.
Vodka with
so with caviar, you drink champagne, Strazza.
Okay. little sparkling rosé.
You like champagne?
Yeah, I
Champagne
love
is nice.
champagne. Yeah.
And you know what they make champagne out of, right?
Who eats caviar? Sean.
Champagne is made out of Chardonnay.
Is it?
Yeah.
No.
You're gonna argue with me?
They don't call it Chardonnay.
Yes, they do.
Is champagne in Burgundy? Serious question.
First of all, Champagne is a region.
I'm asking.
Chardonnay is a grape, and Champagne is near Burgundy. It's north.
Okay.
JC
All
knows his snaps. Yeah.
All
All
right.
right. So hey, you learn something new every day. That's great. I guess I do like Chardonnay.
By the way, Chablis is 100% Chardonnay.
I like Chablis.
Yeah, no shit. It's Chardonnay.
Okay. All right. Well, that's why we keep you around.
Today we all learned something. All right. Well, thanks, Pat, for hanging out. You got any recess?
Of course. No, you guys covered it all.
All right. Thanks, Ian McMillan. Thanks to you guys in the chat. It's Tuesday. We got CRL, Patrick, and Sam will be on today.
Yeah, come on by.
And Steve said, come on, 1 o'clock Eastern time for CRL. Check out all of our research links in the description. Oh, Twitter Spaces as well. Spaces in an hour. Got that going on as we do every Tuesday. See you guys there. We'll make some money. All right.
Bye, everybody.
Adios.